Welcome back, listeners, and we're going to find out how to make some money in what is a very challenging environment. We're going to have a discussion with Peta Rose Hall, CEO of BPM Financial, who is an investment expert. Peta Rose, how are you?
Hi, Aldo. I'm fine, thank you.
Great. Just so we have some context here, what is BPM Financial, or who is BPM Financial?
Okay, about a year ago, Barista Portfolio Management changed its name to become BPM Financial. Mm-hmm. One of the reasons why we did that is that we recognize that there's a whole slew of the population that really does not invest and sees portfolio management, or the word portfolio, as being something beyond them. Mm-hmm. You know, it only speaks to people with money, because a lot of people would say, well, I don't have a portfolio. So it's just really to make it more accessible to the average person.
And how is this being done? Because you are right. In our discussions and observations on this program, we have found that a large percentage of the population tend not to engage, for example, even in the equities market.
Correct. Well, how we do it at BPM is that we have a lot of products which are geared to people who maybe they don't have a lump sum to invest. You know, typically in the past, these investment accounts at most companies would start at about $250,000, somewhere between $250,000. And the threshold was way too high for the average person. So what we have done is we have designed products which bring the threshold within reach of the average working person, where they can actually use a starter account to build up a lump sum, and then from that starter account they can actually select different investment mixes to suit their own purposes.
Finally, somebody who I think has figured out how to do this thing.
Yes, absolutely. You see, the thing is, Aldo, as you will agree, I think most people don't recognize it, but we live in Jamaica in a very high inflation climate. Mm-hmm. And if you are going to put all your money in government paper or some kind of savings instrument, you are not going to make a lot of money over the length of your working life. Mm-hmm. So what I always advise people to do is that you don't have to keep all your money short. Of course, you're going to need some money for emergencies and so on.
Hold on, Peter. Peta Rose. You don't mind call it Peter?
No, of course not.
When you say short, remember, the listeners that we're talking to now, aren't as...
Okay, well, let me define what I mean.
And long, because I've heard short and long, but I may have an idea, but let's not assume that the people listening.
Short term means basically anything that you think you will need to cover emergencies within like a 12-month period. That's considered short. Mm-hmm. The term is considered short. So we're speaking about the length of time over which you can tie up your money, mm-hmm. if you understand what I'm saying. Now, when I was many years ago, I used to be in stock brokerage, and I used to observe individuals who said they can't invest for the long term. You know, they just want to roll their money in some sort of government instrument every 30 days. Mm-hmm. And do you know there were people doing that for 10 years? 30-day paper for 10 years. And they were saying they could not invest for longer periods. Now, the advantage of deciding to put away money for longer periods is that it gives you more options as to what to do. For example, you mentioned equity investment at the start of the show. Mm-hmm. All right. It's a very important category of investing because it requires you to make a long-term commitment so that you can make returns in excess of inflation. Because when you do just short-term instruments over long periods of time, we see in the financial industry that you're not really making returns ahead of inflation.
You know, Peta Rose, I will tell you this, we have been doing this program for a couple of months now, and at the end of each program, I will get a couple of phone calls, or I might get, phone calls at the end of the program
Yes.
But then what I find interestingly is I find that there are people waiting for me outside the studio.
Wow.
With questions. But they've been listening to the program and they want to invest a little money and they don't know how to go about doing it.
Yes.
And I said, why don't you just go to one of the brokers? Because we always, advise them to go to one of the registered brokers.
Right.
There's a feeling of intimidation.
Absolutely.
And so they feel as if they're not sufficiently educated, competent, dressed to go into these bossy offices with jacket and tie people and air conditioned and
right.
And so they feel as if they can't go in there.
Right. And I know that because as I said, I was on the brokerage side of the community for a long time, and it was my observation that a certain category of person really did not come there because they see it as beyond them. This is not for them. This is not for their size of money because their money is small. But small money, Aldo, does grow. And depending on how you invest it, it either grows a little bit or it has the potential of growing a lot. And this is what one of the messages I sort of want the listenership to hear is that you don't have to give your money a prison sentence. Because when you invest in what they call fixed income, and just for clarification purposes, what that means is that you go and buy an investment somewhere and they say, okay, this is going to be your percentage rate of return. You can get 10 or whatever the percentage is. That return is not going to change for the life of your investment. Once you're in that instrument, it won't change because that's the contracted rate. But if you have inflation at 16 and you are at 10, you can see the problem.
But Peta Rose, I think we have a more fundamental problem, I am of the view, and this view has been formed based on discussions and interactions with people, that the vast majority of the population have not been able to view money other than what they see as something that they need to treat with their immediate needs.
Right.
They don't have a culture of treating with money as a vehicle, as a tool to get them to where they want to go.
Right.
They see money as the end.
That's true. And they see it as finite.
Right. And so how they treat money and investing is something I don't think we have really sat down and sought to understand, because until we understand that, I don't think we're going to get a whole-scale movement of the population investing the way that you're asking them to do.
That's true. That is true. It's a long uphill battle. And one of the reasons is that people don't go about educating themselves. We have the internet, Aldo, but it is as if to say the internet does not exist.
No, but it starts, at the school level, and we've had discussions like on this for quite a while. We see in school, and I remember my days in school, which was many, many years ago in high school, and the people who did the accounts and the commercial subjects were people who we thought just didn't understand where life was going.
Right.
Because the way to go was to be a lawyer, doctor, an engineer.
Right.
But the aspect of life which dealt with the commerce, the accounts, how to understand money, how to understand a balance sheet, we didn't think it was important to learn those things.
No.
And it's only late in life, when we are wherever we are in life, we tend to go back to this and say, wow, we should have really spent some time in school.
Yes, you suddenly, when you're working, you suddenly discover there's a whole world of money out there that I didn't know existed. Because nobody ever, remember, not home, people don't talk to their children about money. And
but why is that? Why is that?
I think just culturally what you say. First of all, you have to remember the parents are socialized not to do much with their money. So they don't think of engaging their children in these kinds of conversations.